Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now today we're going to be taking a look at two really exciting things in this video. Number one is Cresco Labs Q4 and full year 2020 earnings. Now this is a company that I just did a deep dive on in the last couple of weeks, so if you haven't seen that video, make sure you check it out. And since posting that video, I've actually opened up a position and started to invest in this company myself. Now I'm super excited about their earnings. I think they were blockbuster numbers, and the company share price has actually pulled back a little bit from where I started to enter. So I think this is a great buying opportunity. The second thing we're going to do in this video is use Cresco Labs earnings to actually build out a comparison matrix to start to look at how you can compare companies in a similar industry. So in this week's video, we're going to compare the top 4 companies in the MJ space in terms of market cap. And I'm going to show you guys exactly what I do when I'm starting to enter a position or do my own due diligence on these companies. So the companies we're going to be comparing to are actually Aphria, Tilray, and Canopy. So all 4 are the heavy hitters in this space. Now before we get into this week's video, please take a second to like and subscribe to the channel. We just surpassed 500 subscribers, so thank you so much to all of you who have already supported the channel. Let me know in the comment section what you think of this analysis matrix, and if you've used something like this yourself when you're starting to research a stock or look into a prospective industry. Now without further ado, let's roll the intro clip and get into this week's video. Okay guys, so that's right. In today's video, we're going to be taking a look at Cresco Labs Q4 earnings. This is a stock that I just recently put a video out about a couple weeks ago. I actually just opened a position as well, so I purchased some shares of Cresco Labs in my private account this last week. They had a blockbuster report, both in terms of Q4 and year end. The shares have pulled back since the earnings report. They're down 5.5% on Friday's close, so the shares are trading at 15.50 Canadian. And I personally think this is an awesome buying opportunity. In addition to looking at their Q4 and year end results, I'm going to compare Cresco to some of the other large cap MJ companies in Canada and the United States and give you guys an understanding of how I like to compare companies both in terms of revenue and EBITDA multiples. Now one thing I wanted to call out here before we start the comparison, a lot of these companies trade on both the US and the Canadian exchange. So for the purposes of this video, we're going to be looking at the US listings of all these companies. I personally purchased Cresco in my account on the Canadian exchange. I paid just over $16.50, so I'm down about $1 per share. But for the purposes of the video, we're actually going to jump over to Cresco's US listing, and here they trade under the ticker symbol CRLBF. So on the US exchange, they're trading at $12.35, which gives us an exchange rate of about $1.26 Canadian for every US dollar. And this is the exchange rate we're going to use throughout the video here as we start to flip currencies back and forth between the $2. So on the US exchange, they're trading at about $2.7 billion market cap. And as you can see, they were trading all the way up to around $17 US back in February. So they have pulled back about a quarter of where they were, 25% from their high in early to mid-February. And again, I think this is just a perfect buying opportunity. And hopefully throughout the course of this video, I can show you guys exactly why that is. Now, first things first, I wanted to take a look at their earnings report here. So as promised, Q4 and full year for 2020 with both record revenue and EBITDA. So if you scroll down and you take a look here, here's some of the highlights. So full year revenue was $476 million. 2020 adjusted EBITDA came in at $116 million. Fourth quarter revenue was $162.3 million, and fourth quarter EBITDA was $50 million. So almost half of their EBITDA came in Q4 alone. Now on an individual store basis, they're doing about $3.6 million per store and a total retail revenue of $68.8 million between the 19 total stores. And one thing I wanted to call out here, everything in this release is quoted in US dollars. So we're going to talk again comparing some of these companies. Some of them report in Canadian dollars, some of them report in US, and we're going to use that $1.26 exchange rate throughout the presentation. Now, when I saw this earnings report, I was extremely excited. I actually wanted to open my position before earnings came out. I had a feeling that they'd be extremely positive. Now, a lot of times, strong earnings, actually you will see a pullback in share price, and that's because maybe they weren't as strong as some investors had anticipated. But honestly, that's okay for me as someone who's just starting to build this Cresco Labs position. I'm happy to be buying this stuff as cheap as possible, and I think by the end of the video, you'll see exactly why that is. Now, the CEO specifically calls out 2020 was a remarkable year for Cresco Labs. We dedicated our resources to the most strategic markets, grew our leadership as the #1 wholesaler of branded cannabis products, executed high efficiency retail, and generated substantial operating leverage as we scaled. So they've now moved into the position of #1 wholesaler in North America. Now, the other number I really like to see in here is the gross profit, which came in just over 51% for the full year. And gross profit was actually 55% of overall revenue in Q4. So that percentage continues to climb. And you can see here in Q3, it was actually 53%. So it's at an all-time high as they close out the year. So overall, phenomenal numbers. We're seeing tremendous growth from this company, and it's really starting to move into that top tier position as one of the largest, most efficient companies in the MJ space across North America. So this earnings report on its own, I think would have been good enough to make a video about, but I'm actually now going to use this earnings report to show you guys exactly how I like to compare companies and try and figure out which one offers the best bang for my buck as an investor. So we're going to take the numbers from this earning report and we're actually going to plug it into a tracker I built to help compare and contrast 4 of the biggest MJ companies currently operating in this space. So what I've done is I've actually built a spreadsheet here that compares Cresco Labs, Aphria, Tilray, and Canopy. And I've taken the numbers that we just talked about for the Cresco Labs report and I've plugged it in here. So you can see share price $12.35, market cap just under $2.7 billion, which we discussed. Quarterly revenue came in at $162.3 million American. Annual revenue was $476.3 American. So if you jump back to the article, you can see the 162.3 and the 476.3 right there. Now in terms of EBITDA, we saw 116 for the full year and 50 for Q4. So we've also taken those numbers and we've plugged them into our sheet as well. And what this allows us to do is figure out a ratio of market cap to revenue and also market cap to EBITDA. So another way to read this is Cresco Labs is currently trading at 5.65 times annual revenue or 23.21 times annual EBITDA. And the way we get those numbers is by actually dividing market cap. So 2.7 billion divided by annual revenue. And you can see the formula right there. Same thing for market cap to EBITDA. You can see we're actually dividing market cap by the 116 million of EBITDA. Now, one thing I wanted to call out here, you'll see that Q4 EBITDA and Q4 revenue were extremely strong. And if we were to extrapolate that out just based on Q4 results, you'd actually be looking closer to about 650 million of annualized revenue and 200 million of annualized EBITDA. But for the purposes of the video and to keep things on a conservative estimate side, I wanted to use the actual annual numbers that they reported. So now we're going to start to compare these Cresco Lab numbers to some of the other big players in this space. So next up is going to be Aphria. So if we open up the Aphria ticker symbol, again, we're going to use the US listing here, so APHA. You can see they're trading at $17.33 with a market cap just under 5.5 billion. And that's exactly what you'll see in the tracker here, 1733, 5.5 billion. Now in terms of annual revenue and annual EBITDA, the most recent report that Aphria has actually put out came out on January 14th, and this was just for second quarter fiscal 2021. So the fiscal years of these 4 companies aren't necessarily aligned, and that makes comparing them a little bit more difficult. So what I've done here, again to be conservative, is I've taken their most recent quarterly numbers. So they actually reported 160.5 million in Q2 revenue and 12.6 million in Q2 EBITDA. Now these numbers are all expressed in Canadian dollars, so we're also going to need to convert them as well as extrapolate them out over a 4-quarter fiscal year. So I'll show you guys an example of exactly what I mean. So 160.5 million Canadian actually works out to 127.4 million American using that 1.26 US to Canadian exchange rate. And I'll show you guys exactly what I mean. So if we take this 127.4, we multiply it out by the 1.26, that gives you your 160.5 Canadian that was mentioned in that article. Now to get the annual revenue, what I'm going to do is I'm going to take that quarterly and multiply it by 4. So again, I'll show you exactly what I mean. So if I take that 127 American, I times it by 4, you're going to see annualized revenue of $509.52 million. And that's what I've done for all these cells in green here. These are actually calculated totals based on the most recent quarter, extrapolated out or forecasted out for the full fiscal year. Now, I mentioned for Cresco Labs, I was actually going to be a little bit more conservative and I wasn't going to use their most recent quarterly results. I was going to use their full fiscal year. So for Aphria and Canopy, they're actually getting the benefit of the doubt here because I'm using their most recent quarter and I'm multiplying that by 4. Now obviously they're going to see growth throughout the year. I would expect Q3 and Q4 numbers likely to be higher than Q1 or Q2, but that's the exact same situation as Cresco Labs. Just like we saw their Q4 numbers came in much higher than the start of the year. So again, I feel like this is as close to apples comparison as possible and probably does skew in favor of Aphria and Canopy because they're getting that benefit of the doubt by using their most recently reported quarter. So I then went ahead and did the same thing for EBITDA. So once we converted that to American dollars, it came in at $10 million of EBITDA, which we then multiplied by 4 to get a full year EBITDA of 40 million. So you can now start to see the comparison between these ratios. So while Cresco Labs was trading at only 5.6 times revenue, Aphria is actually trading at 10.8. So it's almost twice as expensive from a revenue standpoint when you compare market cap to revenue. Now, if we look at market cap to EBITDA, they're actually trading over 137 times compared again to Cresco, which is trading at 23 times. So just about 6 times more expensive on a market cap to EBITDA ratio. So next up is going to be Tilray. So you can see here, again, the US listing trades under the ticker symbol TLRY. So it's coming in at $22.08 per share with a market cap of $3.792 billion. You can see both of those numbers right here in the spreadsheet. Now in terms of revenue and EBITDA, lucky for us, Tilray just reported full 2020 earnings, so very similar to Cresco Labs, and they actually disclosed this in US dollars. So we don't need to do any calculations on these numbers. We can plug them in as they are. So they reported 210.5 million in revenue. And if you scroll down, they actually reported adjusted EBITDA loss of 30.3 million for the full fiscal year. So you can see both of those numbers have been plugged in. And as a result, their market cap to EBITDA ratio is actually negative. So you can see in Tilray's case, they're actually trading 18 times market cap to revenue. So about 3 times more expensive than Cresco Labs, or just about twice as expensive as Aphria. And then in EBITDA situation, like we talked about, they have a negative EBITDA ratio. Now you will see in Q4, it did come in at positive 2.2 million in EBITDA. So if we were to extrapolate out just based on Q4, and we actually just multiplied that number by 4 quarters, you can see that they'd be trading at an EBITDA to market cap ratio of 431. And that actually works out to being 18.6 times more expensive than Cresco Labs on a market cap to EBITDA basis. So we'll flip that back again just to keep things consistent. So the last one I wanted to look at here in the big 4 is actually Canopy, and they have the largest market cap of all companies in the MJ space. And if you actually take a look and you sum up the other 3, so Cresco plus Aphria plus Tilray, the total market cap of those 3 companies comes in at 11.9 billion or 12 billion if you were to round. So Canopy is actually larger than all of the other 3 companies combined. So Canopy is an absolute Goliath in this space. And that's why I wanted to compare the numbers on this company to some of the smaller ones like Cresco or Tilray. So in terms of share price, they're trading at $32.12 US with a market cap just under $12.2 billion. And you can see that right here. So they trade under the ticker CGC 3212 and 12.13 billion. So again, similar to Aphria, we actually need to do some calculations with Canopy. So the most recent report they've put out is Q3 for F21 or fiscal 2021, and this came out February 9th. So very recent, but again, not a full year view, and they were going to be reporting in Canadian dollars. So not only do we need to flip the currency, but we're also going to need to extrapolate out the numbers like we did with Aphria. So net revenue for Q3 was 153 million, and adjusted EBITDA was actually negative 68.4. So if we plug those in our sheet and we do the conversion, that works out to about $121 million US and negative $54.3 million US in terms of quarterly EBITDA. Now we're going to multiply both those numbers out by 4 to get full year results, and you're going to end up with 485 million of annualized revenue based on their most recent quarter, and negative 217 million in terms of annualized EBITDA, again based on their most recent quarter in US dollars. So if we now take a look at their multiple, they're trading at 25 times market cap to revenue, and similar to Tilray, they actually have a negative market cap to EBITDA ratio of negative 56. And in their situation, we can't even use their most recent quarter to flip this to a positive ratio because Q3 in their situation actually was negative. Now, if you compare Canopy back to Cresco Labs, you can see in terms of market cap to revenue, you're actually paying about 5 times the multiple or 5 times the premium that you would be if you were to purchase shares of Cresco Labs. And that's what's got me so excited about building this position, and to be honest, seeing their share price dropping after such a phenomenal Q4 report. I'm really trying to grab as many shares as possible of this company because I feel like it's an extremely good bargain compared to any of these other large cap MJ competitors in this space. The other thing that's so exciting is Cresco is still trading on some of the smaller exchanges, and when it's uplisted to some of these more mainstream stock market exchanges, it's actually going to get so much more access to capital and a lot more institutional investor attention. And I think that's really going to catapult this share price. So for me, I'm happy to accumulate and continue to buy more and more shares, even if the share price is dropping in the short term. Now, obviously, there's a number of other metrics that you need to look at when you're starting a position in a company or when you're trying to compare companies to their competitors. But in a space like this, especially in an industry that's just kind of emerging, it's very difficult to use things like PE ratio to judge a company because things are changing and evolving so quickly. So for me, market cap to revenue and market cap to EBITDA are two very good metrics to allow me to compare apples to apples between companies that are on different exchanges using different currencies and at different points in their fiscal calendar. So hopefully this video has done two things for you. Number one, it's exposed Cresco Labs numbers in terms of Q4 and year end, which were both phenomenal in my mind, and to see how undervalued Cresco is compared to some of these other big four players in terms of revenue and EBITDA. And secondly, I hope it gives you guys a framework to start to compare companies in similar industries when you're looking to get involved or start a position, but you're unsure which company might offer you a better bang for your buck or return on investment. Now, you could put more than 4 companies in a chart like this. You could list as many as you want. You can also do multiple different metrics. You could use market cap, revenue, and EBITDA, or whatever you feel like is the best metric in that given scenario. For me, these are two that I really like to use. It's generally pretty easy information to find in their earnings reports, and I think it gives you a good benchmark or basis to start building your analysis on. Now from here, obviously you'd want to dig in and really look at these earnings reports in more detail, but for me, what this allows me to do is start to narrow down the field and figure out which company or maybe handful of companies is worth that deep dive due diligence before I make an investment. I hear a lot of people talking about Aphria, Tilray, and Canopy. Obviously, they're big, well-known companies, but I really start to shake my head when you look at the numbers like this. You're paying such a premium for those names. Now, we haven't even listed any small or medium cap companies in here, but if you're to start layering in names like Tilt, Valens, G-Tech, you can see the multiples become even more astonishing, and it's really hard to understand how people are going out there and purchasing these companies at these types of valuations. So that's it for today's video, you guys. As mentioned, I have started to build my Cresco Labs position in my personal account. I will document those trades for you here in the coming weeks. I'm going to be using a dollar cost average method to build this position. Because the share price has pulled back a little bit, I think it's an awesome opportunity to continue to deploy money into this company. And I will let you guys know when that position has been built and give you my average cost per share along with total position size. Now, if you haven't already, please take a second to like the video. Subscribe to the channel. We just hit 500 subscribers, so we're halfway to being monetized and hitting that 1,000 subscriber goal. So thank you to everyone who's supported the channel so far. Also, feel free to leave a comment in the section below. Let me know what you think about this type of analysis, this matrix that I use, and how you think Cresco Labs stacks up to some of these competitors. On a final note, you guys, please make sure you have a great rest of your day.